Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, September 28th, 2018, and this is the Daily Report for Gold and Silver, our weekend review, and what a way to end the week as well as the quarter. Don't let today's higher pricing in gold fool you. Although gold closed up $8.80 today, currently at $1196.20, it is closed lower on the week, lower on the month, in fact, lower over the last two quarters of this year. In fact, ever since gold pricing reached an apex at approximately $13.70 per ounce, and this is back in April, we have seen a slow and methodical drop in pricing. Silver also tracking higher today, actually gaining about almost 3% on the day, a tremendous upside spike, currently at $14.69. Platinum gaining by about 0.9% at $8.17. And of course, all eyes have really been on Palladium because Palladium has been under such a tear in terms of price structure and is quickly coming closer and closer to being in parity with gold pricing, now only about $130 difference between those two precious metals. Now, we had dollar strength again today, and that put some headwinds and pressure in the precious metals that gold, silver, and platinum were able to overcome. U.S. dollar gaining about 0.3% at 94.81. In terms of U.S. equities, we saw the Dow Jones Industrial Average eke out marginal gains today at 26,458. Standard & Poor's giving up fractionally at 2913, and the composite index fractionally higher at 8,046. I want to start today's show by looking at a weekly candlestick chart of gold. That is what I have up, and we can absolutely see that gold pricing, in fact, has closed lower on the week. It has also closed lower on the month and closed lower for the last two consecutive quarters of this year, as seen in this quarterly chart. However, on a technical basis, I think the most important piece of information we received this week is when gold actually broke below a previous support level. That support level was created by the use of trend lines. We simply fixed this trend line off of these two lows here, and we had a defined and strong break to the downside yesterday, breaking below not only the compression triangle that we have identified as a strong support level, but also the key psychological level of $1,200 per ounce. That was all breached in trading on Wednesday as well as Thursday, which is why even with today's moderate advance, we are still in a defined downtrend, and we are still trading below this former level of support, which I now believe will become resistance. Our technical studies indicate that we have psychological resistance at about 1,200 and then major resistance up at around 1,217. In terms of a support level, we are currently looking at our first level of support at 1178, and that would be followed by the lows achieved back mid-August when the market actually touched at 1164. We are currently short from 1199.40. We've got a couple of dollars on the trade finally, as we have weathered a market that has been trading in a tight and defined range and was trading above $1,200 per ounce for the better part of the last 3 weeks. Therefore, traders, my recommendation is to maintain our current short position. We did trail our stops down yesterday to 1202.17. My recommendation is to maintain our current stop at that price point. Traders, I think we can all acknowledge the fact that it has been dollar strength that has been so prevalent in putting downside pressure on the precious metals market, specifically gold and silver. This week, although we saw a return to dollar strength, this is a weekly candlestick chart. We can see just how much the dollar index moved this week, and that is coming off of a slight correction, which began when the market was trading just shy of 97 and traded to these lows at 93.50. The other thing that we notice is a simple candlestick pattern called a tweezer's bottom. And a tweezer's bottom is simply when you have equal lows in two consecutive candlesticks. We also have a weekly pattern of an engulfing bullish. We have the price range completely engulfing last week's price range, and it is also coming after a defined downtrend in the market, which is one of the criteria for an acceptable engulfing bullish. Based on our current studies, our next real level of resistance will not come in till about 95.38, so about 50 points or 0.5% from here, and then above that, of course, is 97.50. So I think that as long as we see the dollar move back into an upward trajectory and run through at least up until this resistance area at 95.38, we will see continued pressure in both gold and silver pricing. And traders, lastly, I do want to take a look at Palladium. Palladium has been on a historic price climb. It had a major advance in terms of pricing last week and a continuation of that trend this week. Last week, we saw the market move from just below 970 and touched just shy of 1,047, and that matched this top right here. This came in, of course, in April. April is when we hit the highs on all of our precious metals, gold trading to 1370, but we are seeing the markets actually deviate from each other in that we have continued strength in the palladium market, breaking above this former top in the market, 1147. The next technical resistance area doesn't come into the market until it reaches and tests these highs. These came in at the beginning of 2018 when palladium futures were trading as high as 1120. And traders, we can really see how gold and palladium are no longer running in tandem. When we compare a daily chart side by side, we have gold futures up on the top and palladium futures down below it. We can see without any hesitation that gold has been trading sideways, and while that has been occurring, we have seen a tremendous rise in price in palladium futures. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week on Monday for another daily update and review. Bye-bye.